What's up everyone, welcome back to my channel. I am Tobi and I film videos sharing my life in Canada. I have vlogs, finance content, career content, lifestyle content, all of that fun stuff, and I share and provide tools and resources that would help you to transition into Canada smoothly. So please don't forget to hit that subscribe button. If you aren't subscribed already, don't forget to smash that like button for me. I'll appreciate it. Don't forget to share this video, leave comments and all that fun stuff. So today's video is a continuation of another video. There's a finance video I posted and I was talking about the TFSA account. Today's video is going to be about the RRSP account, and this is really important because this is one that a lot of people make mistakes with, and this video will be useful for people that are planning to come to Canada, people that are already in Canada, and yeah, you definitely learn a thing or two or be reminded about a thing or two. So if you haven't watched that TFSA video, you can wait till the end of this video to go and watch that, because they're different accounts. It's not a continuation, so you can complete this video then go and watch that. But yeah, let's dive right into the video. So as you already know, we pay a lot of taxes in Canada. Different countries have their own version of this account that I'm going to be talking about today. And yeah, let me just explain what the RRSP is. So the RRSP is the Registered Retirement Savings Plan. It's an account that is registered and given to us by the government of Canada. There's like a whole purpose of using this account, and I'm just going to do a breakdown of what this account is, who's eligible, when to use it, why to use it, and how to use it basically. So what is the RRSP? It is a tax deferred account, and this account is for people who work. As long as you work and you pay your taxes, this account is for you. Typically it's an account used to defer tax until retirement. I'll go into detail about that very soon, but this is just a high level of what the account is about. And one thing to note is that an RRSP account is tax deductible, so you can actually reduce the income that you pay on your taxes. So this is really good for high income earners. There are different requirements to be eligible for the RRSP account. So you have to be a Canadian resident. It's just similar to the TFSA account. So you have to be a Canadian resident. You have to have your social insurance number. For RRSP, you have to have worked, because that's the only time, or that's how your RRSP account is calculated, or your contribution room is calculated and all of that. So let's talk about contribution. So you can contribute when you start earning income. That's when you can contribute into your RRSP account. That's why I say it's for workers, when you start earning income. And your contributions can reduce your taxable income for the year. I'm just going to give a simple example with this. For example, let's say someone earns $100,000. So let's say their net income is $80,000. So that means they pay $20,000 in taxes. Their actual income that the employer said this is your income is $100,000 per year. So that's annual income. $20,000 to the government, and $80,000 is actually all that they get in their accounts. So there's person A and person B. They have the same income, so they both get $80,000 into their accounts at the end of the year for the whole year. Person A has an RRSP account. They use their RRSP account. Person B doesn't use their RRSP account. So with person A, during the next year when they're filing their taxes, they actually tell the government, or the government goes through it and says that, oh, person A contributed so and so amount into their RRSP. Let me just say they contributed $10,000 into their RRSP, for example. I'm just using round numbers so it's easier. But person B didn't contribute at all into their RRSP. So yeah, person A actually only got $80,000 paid into their accounts, because the government removes their taxes before you even see it or smell it, if you're working as an employee, if you're not a business basically. So tax season comes, the person files their taxes, and government says that, oh, we actually taxed this person at an annual income of $100,000. So this is where the RRSP comes into play, because they contributed $10,000 into their account. I remember I said the RRSP account is tax deductible, so it actually reduces your income taxes. The government says that, okay, that annual amount was $100,000. They contributed $10,000 into their accounts. So now we remove $10,000 from that $100,000 that they've contributed. for this purpose, their income to the government is $90,000. And you know how Canada is, your tax brackets and the amount of taxes you pay will depend on your income. And you know, the higher your income, the more taxes you pay. So now, person A in that context of like using the RRSP is only making $90,000 per year because they contributed $10,000 into the RRSP. So now they do their calculation and see that instead of taking $20,000 from person A, because person A is actually only earning in that lens $90,000, we're only meant to take, for example, $15,000 for person A, not $20,000 from person A. So from 100K that they earn, person B only gets $80,000, and from 100K that they earn, when everything is sorted out and balanced, person A is meant to get $85,000. So in that example I gave, person A's taxable income was $90,000 and person B's taxable income was $100,000. So that's why the difference comes. But yeah, personally, I actually got a lot back in tax refund when I filed my taxes this year. And this is because I contributed into my RRSP and I actually maxed out my RRSP. So the government gave me back money because the taxable income that they used initially wasn't the actual taxable income they were meant to use because I contributed into my RRSP. So that reduced my taxable income. So yeah, that's kind of how it works. I can go deep into detail, but this is not really about taxes, but it's really good to know a lot about taxes. But this is not about taxes, this is just about the RRSP account, and this is like RRSP 101 basic level, just knowing what the account is. So I'm not going to dive into detail. Like, we can go into a rabbit hole with the RRSP or when we talk about RRSP. Your RRSP account has a contribution limit. This is really different from the TFSA. If you watched the other video, you know that the TFSA contribution limit is really based on your age. Then you can use up your contribution room, all of that. But for the RRSP, it's actually based on your income. So I started working in Canada, I think at the age of 18 or so. So I actually started building up RRSP room from there. Even if it was just retail job, my RRSP room was actually building up. What they call it, research assistant in school for my professor, my RRSP room was building up and all of that. So it's really based on your income. And if you want to know your contribution room for RRSP, you can go to your CRA account and it will show you how much you can contribute into your RRSP room for the year. And one thing to know is that your contribution room is carried forward. That age of 18, when my contribution room in my RRSP started growing, I didn't contribute into my RRSP because there was no point at that time to contribute. Like, there was no reason based on my own timeline and all of my analysis to contribute at that time. But last year I was able to contribute based on my contribution room from previous years and my contribution room from last year itself. And with everything with the government, there's always a limit. So it's not really based on only your income. There's a calculation. So it's like 18% of your income, and there's always a maximum every year. So this numbers, just always check CRA, because you might be watching this video in 2023, 2024, and things would definitely have changed. So check CRA for the number. And as I said, any contribution room will be carried forward, and some companies will actually allow you to deduct the amount you're putting into your RRSP before they actually remove the taxes. So it just depends on your company's accounting system and all of that, but most companies will not do that because that's just extra work. But some companies do that. But if your company does that, just know that you're not going to get a tax refund the next year because they've already accounted for your actual taxable income because you were contributing to your RRSP. So you probably will not get a tax refund from that the year after. And as I said, this is like really directly related with your working years and age. So you have time to contribute onto a certain age. I think it's age 71. I may be wrong. You can double check that. But I think it's age 71. So let's talk about what you can do with your RRSP. It's the same thing as what you can do with your TFSA account. So you can use it for savings. Like, you can have an RRSP account and just only put money there and saving inside it. You can use it for investments. As I said, I personally use my RRSP account for investments, or rather my TFSA for investments, and my RRSP also is for investments, straight up investments for the two of them, aggressive investments for me. So let's talk about withdrawing from your RRSP account. As I said, this is a tax deferred account, so you actually still need to pay taxes your RRSP, like the money in your RRSP, because when you withdraw it, it is seen as income. That is not a tax sheltered account like the TFSA is. So this is actually just a tax deferred account. You still pay taxes on it, because if you remember, with the whole calculation and all of that, they removed that taxes from that person A, but the person was literally just deferring their taxes to later on, maybe like 20 years down the line, 40 years down the line, and all of that. You would still pay taxes. But they are like reasons why people should open an RRSP. Another thing to know about the RRSP, which is different from TFSA, is that your contribution room would be lost when you withdraw from your RRSP. The main purpose of this account, or why the government really made this account, was solely for retirement reasons. So for people to be able to have money when they retire and not fully depend on the government. It is really a strict account. They make things really strict. So if you maybe contribute into your RSP, let's say since I contributed into it, let's just say something comes up and I really need to take money out of it, I'm going to lose that contribution room from my RSP. So that's something to know. But obviously, as the years go by, you gain more contribution room, but I'm just going to lose that money. I can't put it back. If you remember with the TFSA, I said if you withdraw money, you can actually put it back into that TFSA account maybe the next year. That's if you've already maxed your contribution limits for your TFSA. But with RRSP, if you withdraw money, that's it. You're not regaining that contribution room back, but you would still have future contribution rooms based on your income, if you get what I mean. With this account, as I said, withdrawing money has like tax consequences, because you still pay taxes and sometimes penalties and all of that. But there are actually exceptions. There are programs that the government actually has as exceptions on when you would not have like those consequences. So one of them is that you can make a free withdrawal up to a certain amount to buy a house. There are a lot of rules into play. I might do a future on this, like a video on this in the future. I'm not promising, but there are a lot of rules to it, and you actually still have to pay back. So it's like you're borrowing your own money that's from your RSP account, so you actually need to pay it back. Another thing you can use it for, like another exception, is the lifelong learning plan, and this is towards education. There are also rules to it, and there's also a maximum that you can use. So let's talk about when to use your RSP, because as I said, you still end up paying taxes. So sometimes people are like, what's the point? I'll still end up paying my taxes, so what's the point of using an RSP account? First one is to use it if your employer has a like an RRSP match program going on, because that's free money for you. That's money you are leaving on the table that your employer is giving you. So if your employer has an RRSP match program going on, don't even bother thinking of I shouldn't use it because this, I shouldn't use it because that. Just use it, because that's free money you're leaving on the table, especially if you're staying with the employer for a long time. Like imagine how much you could make from them matching what you're contributing to your RSP. So contribute into your RSP if your employer has that. Find out if your employer has that and contribute into your RSP. That's like a benefit of working for that company. The second one is if you know that you won't need the money until retirement, because withdrawing from it is kind of pointless. It defeats the whole purpose of it. I know at retirement you'd actually still withdraw money and you have to pay taxes on it, but if you know you don't need it till retirement, then you can actually contribute into that account, since that's the purpose of this account. One other thing is that most times people say that if you know that you're going to be earning a lot of money, or like more money during this period than you would in retirement, then it makes sense to contribute into your RSP. Because for example, let's just say you're earning 200k per year, or like 100k per year, and as you climb your career ladder, you're going to be earning more and all of that. Those are your prime days when you're earning more money. Whatever you can do to save on taxes, and one of the best way to, or like one way to save on taxes, is to contribute into your RSP account. So like a lot of high income earners contribute into their RSP account, especially if they know that when they retire they're not really going to be working and they're not going to earn a lot. So at that stage of retirement, when they're withdrawing from their RSP accounts, their income is significantly lower, or like lower than their working age when they were actually earning way higher and contributing to their RSP. So you actually pay less taxes. As I said, in Canada, you pay, like the more you earn, the more taxes you pay. So if you're a low income earner at the age of retirement, or at least not like no income earner, if you know your income is going to be lower than your working years, then you might consider, or you should consider, contributing into your RRSP. Then there's also a rule of thumb that people say. They say if you earn, I can't remember the exact number, but if you do a calculation and all of that, saying that if you earn $70,000 upwards, you should contribute into your RSP, and you can max out your TFSA first, especially if you're not like a really high income earner. You can max out your TFSA first, then once you've maxed out your TFSA, you can contribute into your RSP. Just figure out what works best for you, figure out your situation. If you're a high income earner, it's like good to invest in your RSP so you can, or like contribute to your RSP so you can reduce your taxes if that is something you really want to reduce. There are different ways where you can, like different methods and different ways you can use to reduce your taxes. I may talk about some of them in the future, but yeah, this is one way to reduce your taxes. So if you're someone that's really particular about reducing your taxes, this is one way to reduce it right now. Remember, it's tax deferred, so you'll still pay the taxes when you withdraw it and later on. So just always remember that it's tax deferred. It doesn't mean that you're not going to pay taxes on that money. You're going to pay it in the future. But yeah, that's the end of the video. Let me know in the comment section, do you have an RRSP account? If you're in another place like America that isn't Canada, any other place that isn't Canada, what's the equivalent of RRSP called? Because a lot of countries have their own. What's it called in your country? Let me know if you have an RRSP account, if you're going to create one, and all of that stuff in the comment section. Let me know if you really gained from this video, if you learned a thing or two from this video, and I really appreciate it. Please don't forget to smash that like button for me. Don't forget to hit the subscribe button, leave comments, share this video, and yeah, I'll see you guys in my next video. Bye.